Investors and traders, welcome to the channel, Market Chart Pet, and today is 20th of April 2024. Hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US markets. We'll start by taking a look at the bond market. We'll take a look at the shorter term notes, the 2-year Treasury note, and then we'll move to the long bond futures, which is 30-year duration towards the longer end of the yield curve. Then we will move to the stock indices analysis. So this video might be a little bit longer than our usual ones because there are a number of things to cover. So do apologize for that in advance. So thank you very much for watching the video, and as always, this video is for educational purposes only and it's not a financial advice. Okay, so what we are looking at is the daily chart of Dow Jones Industrial Average Cash Index. So this is the cash index, this is not the futures. And here what you see on the screen with these nice colors is actually a timing model that we have been following for quite some time. The longer term viewers, subscribers know about this one. I'm not going to go into the details of how it's being worked out. There is a whole video about it which you can have a look in the history or in the archives on the channel. So it has a pretty good record of certain key days, picking out certain key dates. It was I picked up a really key date on the 31st of October 2023, which was very close to the an important low, a very important low. And now the way it works with the timing is that we have to give it 2 to 3 trading days on either side of the key date. And then there was a micro top which came in around the 20th of December 2023. And then more recently, around 27th of February, we were watching for this date really carefully. A micro top was also formed around 23rd, the Friday before. The market went sideways to lower for a few days before moving higher. And then we had a really important date coming in around the 2nd of April. And also we had a low to low cycle date appearing around 4th of April as well, because we had a confluence of 2 dates coming in. It's always something which we pay close attention to. So this 2nd of April date, which is actually the 1.618 Fibonacci external extension on the time axis, proved to be a really key one, because just before that what we can see is here we go on the Monday. The market actually in fact on Thursday 28th, the market had formed a double top, and the following Monday 1st of April we had a negative close, and then the market started a correction, and it has corrected a fair amount. Now the next date which is coming up is on the 29th of May 2024, so in about a month's time. It's a little far away. So we'll just keep that one in mind, and we'll see what happens when we get there. With that, let's begin to take a look at the bond market. We'll start by taking a look at the shorter term 2-year Treasury note. So this is on the yield axis. So what I mean is on the y-axis you see the yield for the Treasury note. And what we see is that this 5% mark has been really important. The market is just hovering around. Still, these levels are really elevated compared to what they were beginning of 2024. So what it is actually showing us, or what it's telling us, is that the markets, the bond markets, the note markets, which are very interest rate sensitive markets, are actually telling us that higher for longer in terms of interest rates is being expected. So as we move in time, the expectation for the Federal Reserve to start embarking on a cycle of lower interest rates is being pushed out into the future. And with this 2024 being an election year, now actually in fact the markets are pricing that Fed might not even hike the interest rates before, lower the interest rates before the actual elections take place in November. So the actual first cut might come in November. We'll have to wait and see, but that's what the talk is going on in the market. And the charts are certainly telling us, because the yields have gone up a fair amount by a percentage point where they were in the month of April, at the start of April 2024, and with this 2-year Treasury note being around 5%, and 5% is a pretty key level, because above that in the recent history it's just gone up to 5.25 So we need to take a note of what is happening in the shorter end of the curve. Now moving on to the long end, so looking at the long bond futures, which is the 30-year treasury note futures. Here we were watching for this pattern formation. We were waiting for a low to come in, but in my opinion that the point C is still there, and that could have, if we would have seen a really strong move and a sustained move to the upside, yields going lower, that would have indicated perhaps the market is indicating that the yields are likely to move much lower, because we would be in this CD like higher. Of course, there are a number of resistance points that need to be taken out, but what happened is that we did find a low and we rallied for a few days. So we rallied for 1, 2, 3 days, and it found great amount of resistance from 38.2% retracement, and then over the course of next 5 trading days we have just moved lower, and we are just still hovering around the 113.10 mark, which is the low of this bar, and last Friday was an inside bar formation. But the chances are, in my opinion, that this pattern that we're watching for is perhaps actually not working out. Of course, there is one lower level around 111.15, which is 78.6% retracement, but the kind of more sustained move to the upside I was expecting did not happen. Again, what it is indicating is that the market is actually pricing higher interest rates, and this one is for the longer end of the curve. Okay, so with that, now what we'll do is we'll move on to S&P 500 cash market. I am not going to go through the dollar index and the gold market in this video, because there is a separate video already done and uploaded yesterday for the gold market. I will put a link to that video towards the end of this video, and also in the description, so that way you can have a look at that one. Okay, so we'll take a look at the S&P 500 cash, and I'll just quickly move to the weekly chart. And here something that I want to emphasize on right from the start is look at this blue line, which goes from the left hand side of the screen to the right hand side of the screen. In fact, I have to move it over, and that trend line is still intact, which means that the bull market, which is has been running for quite a while, since 2020, is still running. However, the bull markets have corrections, and it appears that we are also in a correction, which shouldn't come too much of a surprise, in the sense that because we were watching for certain key levels, especially when we had this big ABCD cycle completed, which is in blue, which was around 5200 roughly speaking. We were expecting that we had a confluence of ABCD, the 1.272 expansion. That's why we have drawn this boundary bar here that was moving into that range, with the possibility of slightly higher around 53.93. But the chances were that if a pullback was likely, because we were hitting our pattern formations, and we have seen a pullback. So far what we have seen is the market pullback by about 5.92%. Now I have used the tool from TradingView for that, so I've not calculated it myself, so this figure might be a little bit different for you, but this is what the tool is giving me. Now the really key question is whether the correction is over, or whether we are still in a correction, or whether we are going to move higher and make an all-time high. We have 3 different questions and 3 possible scenarios, so we'll try to evaluate that. So the way I am looking at this is, if we just begin to take a look at this entire cycle, where the 2022 bear market ended on October of 2022, there have been 2 previous occasions, and this is the 3rd occasion where the market has pulled back. So this one has so far pulled back about 5.92%. The bigger one, the BC in black that we see, it was about minus 10.89%. And then another one, let's take a look at this one. If we draw it like this, it was about 9.23%. Okay, so which means that the current market correction in terms of percentage is actually smaller compared to the previous 2. So in terms of absolute, if we were to just use the market symmetry concept here, we are not there yet either. So because of this, there is a possibility that the market could actually be still in a correction, and we could in fact move lower. Now, what could be a possible target? One of the ways to look at it is, if we look to the left, we have this structure high coming in around 4800. So I believe it's around 4810 level. So roughly speaking, 4800 is the kind of ballpark figure, and that is also very close to the 38.2% retracement of these high to low of this low, which came in October of 2023, to the recent highs here, which also comes around the 48.2024 level. So that's one key level to watch. If we are in still in a corrective mode, then that could be a possible target. And if that happens to be a target, then let's see in terms of percentage, what kind of percentage points are we looking at. So we could be looking at about 8.71%, which is still a little bit smaller than this bigger BC corrective phase when it happened. So it is perfectly acceptable in my opinion. Now we'll just move over to the daily chart, and we'll just try to evaluate these three scenarios, how they may unfold. So one of the things that we are watching for in this S&P 500 cash is that we were watching for this ABCD price pattern formation, which could in fact take us as high as 51.28 to 51.46 or 51.47, which is the 61.8% retracement. That is also possible. So if we were to evaluate and take the first scenario that we are in a correction, if we just take this as our A to B leg, and then we have to make an assumption that assuming the high comes from the 61.8%, so if we try to project it, we also come close to 48.35, which is fairly close to that 4800, 4810 level that we had a look at on the weekly chart. So that could be one possible way the market could unfold in ABCD formation if the correction is to continue. Another scenario is in fact that this 5.92% correction is all that we have seen, and then what could happen is that let's say if the market completes this ABCD, which is in fact a corrective pattern formation, the market could in fact move lower and maybe make a lower low here, challenging these lows, so coming very close to it, or maybe slightly lower than this one, and essentially forming a double bottom formation, and then we complete the phase. And then the third possibility is of course that we might have seen a low, and then on the break of 61.8% retracement, I think we'll begin to get more of an idea that in fact the market might be moving for its all-time high and maybe probably ready to make another all-time high. Now if I were to give a probability, the first scenario where we do A, B, C, D to around 4800 is probably, in my opinion, about 50%. If we make a double bottom formation either around here or slightly lower, maybe around 30%, and 20% that we might have seen a low. That's the kind of probability I would give to this scenario. So now I think what we can do is just leave this possibility on the charts, and then we'll have to evaluate as we go whether it'll pan out like this or not. And again, this is assuming it goes to 61.8% retracement. It might not, it might just form this ABCD, and then we start the correction in the next few days, the next leg lower. And the other thing is, if we were to take this assumption and just look at the expansion of this, I think I've already done this. Let me delete this. So this is the expansion part of it. 1.618 expansion also comes very close to the 38.2% being marked around here, and also the ABCD. So roughly around 4810 level, we will have a confluence of a number of things coming together. So again, I'm putting forward 3 different kind of scenarios that are possible in my opinion, and how they might unfold and what are the key levels that we should be watching. Okay, so now we'll just move to the S&P 500 futures. Cash market I like to use for longer term because it's the cash, and for shorter term, then it's really important to also take a look at the futures market. So this is the ESE mini weekly chart. Here you can see the ABCD completing here, and the market pulls back. The market pulls back to roughly, yeah, it doesn't do the 38.2%. The 38.2% on the futures comes around 48.68. And let me actually delete this expansion to make things a little bit clearer, which is also very close to 48.44. So that's the previous high, which could act as a support. And then if we move to the daily charts, so here we go, we'll have to do the similar kind of analysis which we have already done for the cash market. So I'm not going to go and look at the different corrections that took place here and how much magnitude they were. We'll just take a look at the pattern formation, and the formation that we are looking for is here with a possibility. So market pulling back, it goes and pulls back right into the 50% to 61.8% retracement right here. And then on last Thursday, we saw a pretty good rally, which took out the highs of last Wednesday, coming right from the 61.8% retracement. So let me actually mention this, that this one was actually a 61.8% retracement. And last Friday, the market took out the highs and it went to about 50%. So this is, let me actually draw it here. This is 50% retracement. And there's a possibility that we are in fact in ABCD mode higher, which could in fact see 5200. And if that's the case, it is 5200. I'm gonna make it a little bit more clear here. It will complete the ABCD right at the 61.8% retracement, and that's a a very key pattern formation that we need to watch really carefully, and it could be a pretty significant resistance level. And if that turns out to be the case, then what we were watching on the S&P 500 cash market, we just try to, assuming that will be the high, make an ABCD formation here. There we go. And it could take us right here as low as 48.29 on the ESE mini futures, which I believe is fairly close to that 4800, 4810 on the cash market that we were looking at. So this is the possible scenario that this correction might unfold in an ABCD formation. The other way is, of course, that it might form a kind of a double bottom formation, testing these lows around here, maybe even making a slightly lower low. Or if this was the low, we already know what are the kind of probabilities we are giving. 50% to this scenario, double bottom formation, maybe another 30%, slightly lower perhaps, and then of course this might be a bottom being around 20% in my opinion. So we'll wait and see what will happen. Now we'll move to the NASDAQ. Now NASDAQ is very interesting. So in NASDAQ, let's move to the weekly chart. So this is the E-mini futures for NASDAQ, NQ100, NQ futures. Here, the interesting part is this. This market went exactly to this 1.272 expansion, and we were watching for possible resistance. We did have higher levels as well because of this ABCD, and the ultimate high we are looking at is basically this 1.618 expansion and a completion of this ABCD. So that comes around 20,850, so anywhere between 20,600 to 20,800. We do have some higher levels, but this 1.272 expansion is a pretty strong resistance, and the market just went nowhere for how many weeks? 1, 2, 3, 4, 5, 6, 6 weeks, and then 7th week we had a pretty strong week to the downside. Okay, now really interesting thing is that if we look at this entire move high when this bear market in 22 ended in October of 2022, and we begin to look at what we really like to take a look at in this channel is the concept of market symmetry. So this is the correction, the first correction that took place in this run, and if we just copy this one and we move it over here, we have this phase which was exactly the same, this one exactly the same, and in fact this was the ABCD formation. And now again, if we take a look at then in terms of actually the actual magnitude of the move, we have actually achieved that already in the NASDAQ 100. So this is something really important to pay attention to. Now what we'll do is we'll begin to take a look at in percentage. So if we take a look at what this move has been in terms of percentage, then the NASDAQ has been about 8.49% down. And again, if we take a look at some of the other moves, so this one, we take it down, take a look at around here. Okay, then this correction was about 12.24%, and then this one was, it's already there. So let me get rid of this tool here. It was 13%. So in the percentage terms, just like the S&P 500 cash we took a look at, this move down is actually a little bit lower, and there is like approximately 4 to 5 percentage points based on this previous corrections that is perhaps possible. So this makes me think that we may still be in corrective mode, and there could be a few percentage points lower which might be possible. So again, this is similar to S&P 500 scenario based on the percentage moves that I am pointing to. Now if we begin to get something which is going to be more than 13%, then we have not seen this entire move higher. So this means the market symmetry concept is also changing in percentage points as well. So maybe something is different, something is changing, and we'll pay close attention to that. But for now, we seems to be in the parameters that we are looking at. So with that, what we can do is we can move to the daily chart, and here something similar to the S&P 500 cash scenarios that we're looking at, the chances are that the market will try to make a move towards 1800, slightly higher, maybe 1850. We're not that far away. We are maybe about 350 points away, which is not much for NASDAQ. It could do it in one day, and if that were to happen, then we could be looking at this ABCD formation like this. Let me also draw it like this around here, which could in fact see on an ABCD formation the market go down to about 16,500 roughly speaking, and I believe we also have an expansion around here. So this is again assuming the market goes to 61.8%, and if it doesn't, then our calculations will have to adjust. So with an assumption that market is likely to get there, we'll also have the 1.618 expansion here. So we'll have a confluence of two ratios coming together, which is always something really important for us, and we pay close attention to it. So I'm just trying to draw this. Cannot get the exact, so let me try. It's gonna be close enough. And what it means, okay, it's already there. So What it means is that 16,964 is 38.2% retracement, but this will be actually going a little bit below that. It will be like 50%. So the 50% retracement will also be very close to it. So that's one scenario in which the correction could unfold, and if that were to happen, then let's take a look at in percentage points how much would that be. Here we go. So 50%, it will be 12.2%, and as we have seen on the weekly chart, let me actually go back to that. Here we go. We have seen 13%, 12.24%. So in terms of percentage, it will be, in my opinion, kind of in line with what we have seen in this cycle higher or move higher since October of 2022. So this is what I'm putting forward, that the correction might actually unfold like this, and we might see a 12% correction as a possibility. That's one scenario. The other scenario is that the market rallies to 61.8% retracement, rotates lower from a internal low here, maybe slightly lower low. So that's going to be a double bottom formation. And the third scenario is we might have already seen a bottom, because if we go back to the weekly chart, in absolute terms, market symmetry concept, in absolute terms, we have already met the previous corrections here, here, and here, which means that market begins to recover and finally take out this level, and so on its way higher. So just presenting the different kind of scenarios which could unfold. Apologies, the video is getting really long, so I'll just really quickly take a look at the Dow Jones. Now the Dow Jones one is interesting because it had a pullback. It's gone to the 38.2% of its October 2023 lows. Some of the other indices haven't done that. So Dow is interesting in that respect, and could be actually recovering quicker. And then if we look at the Russell 2000, possible double bottom scenario here because of this 38.2% retracement, and then of course structural support coming here. And then here we go. If we just take this retracement around here, it is right at the between 30 and 50%. So in my opinion, for it to get stronger, it should really begin to move higher than the 61.8% retracement. So we are seeing these different indices playing out differently, and what I've attempted to do in this video is try to portray a holistic picture based on different indices. The Dow Jones has already made 38.2% retracement of October 2023 lows. The Russell 2000 has already done that, and both of them are being supported from these levels. The NASDAQ is SP500. They haven't touched their S&P, the 38.2% retracements yet from the October lows, but and I've also presented the different if the correction is to continue, what three different scenarios it could happen in. So we'll wait and watch and see how the price action will unfold next week. With that, I'm signing off. Good luck and good trading. Apologies for the really long video. If you do like how we are evaluating and doing the technical analysis with the help of pattern recognition, Fibonacci ratios, expansions and extensions, then please give the video a thumbs up. And if you like our analysis, then please do subscribe to the channel. Thank you very much. It'll be really appreciated. Thank you very much. Good luck, good trading. Speak soon.